Hey everyone, this is Angie with Elimtrade, and today we are going to discuss some of the really market-moving releases that are worth watching for price action and profitable trades. The rest of 2019 is pretty light on the economic calendar. We do have the release of new home sales from the United States on Monday, December the 23rd. Why is this important, you ask? Well, new home sales is a really good indicator that shows us how consumers, just regular people that spend money, how they are feeling financially. And this gives us clues on future economic activities. Also, new home sales generate a lot of jobs and also investing. For example, for construction and for purchasing the land and the property. Also, new home sales tend to be more expensive, obviously because they're new. Another thing to pay attention to is that new home sales, they tend to spur more spending from the buyers. For example, you have to fill up your house with furniture, buy TVs and other appliances. These appliances, they're also called durable goods, as any item that you purchase that lasts more than 3 years is considered to be durable goods. Now, a few things to pay attention to is that the past few readings for building permits has been above forecast and actually increasing. Overall construction and home building is an optimistic euphoria, which means that they are positive about the economy and they believe in the home sales. Now, the positivity is driven by several things. For example, the low interest rate in the United States that leads to low construction loans and also leads to low mortgage rates. Another thing is that the unemployment rate in the United States is also low right now, and there's an easing in trade tensions between the United States and China, which we'll talk about a little bit later. Now, on the flip side of the coin is the affordability for the consumers or for the buyers. The thing is, according to statistics, the median home value in the United States rose by 4.7% over the past year. Unfortunately, the average hourly earnings are not increasing at the same pace, which makes it less affordable. Now, it really depends on what are the consumers going to do. We believe that new home sales are going to pick up because as consumers are taking advantage of the low interest rates and they are buying new homes, the house value is only going, the housing prices are only going to increase. So people are probably going to rush so that they and buy new homes so that they don't miss out on the opportunity. According to Bloomberg, the U.S. Home building sentiment in December is the highest since 1999. Now, we do recommend for you guys to watch for the real estate ETF that's available on the Elimtrade platform during the release. So in the beginning of January 2020, we're going to have several releases on PMI. Basically, there's two parts, manufacturing and non-manufacturing, which is basically like services. These readings are really important because when we are gauging the state of the economy, how the economy is doing, we check to see how manufacturing is doing. See, manufacturing, in order to exist and survive, they need supplies in order to make their products. And they have what is called a corporate purchasing manager. Basically, every month, these purchasing managers, they report on new orders. And if manufacturing is increasing, they are going to need more supplies. Another thing to remember is that the indicator is displayed as an index, and if the number is above 50 means that the manufacturing sector is increasing, is growing. And if the number is below 50 means that the manufacturing is contracting. Whenever there's a contraction in manufacturing, this is bad for the economy. Now, the services sector, non-manufacturing PMI, usually stays afloat even when manufacturing is declining because things like doctors, hair, barber shops, lawyers, and other services, they're always needed. I guess what I'm trying to say is when people start saving, they'll first hold off on buying material things versus saving on services. Now, let's look at some numbers. On January the 2nd, we have the release of German and British PMI, and on January the 3rd, we have United States ISM manufacturing. Now, German manufacturing PMI has been below the critical level of 50 since January of 2019, and the preliminary report was at 43.4, which is pretty low. The United Kingdom manufacturing PMI is also below 50 since June of 2019. And what's more disturbing is that the services PMI, so non-manufacturing PMI, also took a hit because of Brexit tensions and is also below the 50 level mark. The United States manufacturing, ISM manufacturing, is also riding below 50 since September of 2019. Now, low PMIs are bearish for the national currency. So the United Kingdom on the GBP, Germany on the euro, and US on the greenback. Now, my friends, let's talk about the overall picture and what's going on the market. So the phase one deal between the United States and China has been met, or so the markets and investors and traders are perceiving. President Donald Trump did announce on Twitter, yes, on Friday the 13th, that the phase one deal has been met and called it amazing. I'm not sure if China feels the same way. The thing is that the trade deal is still only verbal while China reviews the deal. Now, the additional tariffs that were supposed to go into effect on December the 15th did not go into effect, so this is a really good sign. The really interesting part of the trade agreement is the agriculture purchase. President Donald Trump announced that China, and I quote, is going to make a purchase of agriculture in the amount of $50 billion, quote, pretty soon. The thing is that this amount is twice the amount that China purchased in 2017, which was around $24 billion. And check this out. According to the United States Department of Agriculture, the 5-year average export of soybeans, corn, beef, and pork to all countries amounted to $44 billion. So this is a very interesting situation. The main point that I'm trying to get across is that the trade war is far from over, so we'll have to see what happens next. Well, that's not the only trade deal that's on the agenda. We also have the USMCA. This is a trade agreement between the United States, Canada, and Mexico. It is going to help with the labor market, so it create more jobs and help with the GDP. Mexico was the first to ratify the trade deal. The United States House of Representatives will check it on January the 19th. Unfortunately, Canadian legislation will return from winter break on January 27th. Now, the Canadian president did mention that they will ratify the agreement as soon as possible. The trade agreement is very good and important for the United States in order to avoid a recession. Once the trade agreement is complete and signed, we do expect the Dow Jones to hit 30,000 points. Now, for UK and Brexit update, Prime Minister Boris Johnson has been re-elected with massive majority in Parliament. Unfortunately, all the gains of the British pound during the elections has been wiped out as Bojo takes back to his old ways, and the no-deal Brexit phrase is flying around again and scaring investors. President Donald Trump did congratulate Prime Minister Johnson on Twitter and said that the two nations will now make a massive new trade deal after Brexit. So there's another interesting situation in the United States with oil, specifically tight oil, which is also called shale oil, as it's derived from shale and limestone rock deposits. Now, several regions in the United States are faced with an economic slowdown because of lower oil and gas costs, because companies are looking to increase their profits rather than expand their business. Now, a further cost reduction is expected in 2020, and what you have to understand is that United States oil companies heavily rely on extremely large leverages from banks. And if oil companies default or go bankrupt, banks would be next and we would have a total catastrophe. On the from the good side of things is that hedge funds have invested in oil the most in 3 years on NYMEX. So the point to take home is that oil prices are not expected to drop, and Brent support is going to be around 60 and Brent resistance will be around 66. So my friends, now that you have all the information that you need to start the year right, I wish you happy holidays and profitable trading in 2020.